Reading candlesticks patterns is one of the main and basic skills needed for a successful trader. So I opened this deal for $1,000 based on one of those patterns that I noticed just a couple of seconds ago. And in this video, I will tell you all about the main candlestick patterns and how to read them. But for now, let's wait for this deal to close and let's proceed to the analysis. So let's talk about what we're gonna do today. In this video, we will briefly analyze the basics and of course I will tell you all about the structure of Japanese candlesticks. Next, we will analyze engulfing pattern and I will show you how to use it, of course. And then we will look at the Doji pattern that you actually already know because we used it in our hack and nashi strategy. And next, we will analyze the momentum of candlesticks as well as Marubozu pattern. And at the end, we will look at the hammer and shooting star patterns. Now getting to the main portion of the video, and we're gonna review the basics. I know that almost all of you already know all of it and there's nothing new about it, but still let's talk about the basics. And we're going to talk about candlesticks, two types, bullish candlesticks and bearish candlesticks. If we are talking about bullish candle, this is a green candlestick, the closing price of which is higher than the opening price. And bearish is vice versa. The closing point is lower than the opening point. If you're talking about the structure, every candlestick has its body. It's like this thick part. And it has its shadows. It can be on top or on the bottom. And if we're talking about the bullish candlestick, then let's look at the structure of it. The beginning of the body is down, basically. It's like when it's opened, and the closing is going to be the top of the body. And of course, the shadow shows us the highest point of the price, and the shadow on the bottom is the lowest point. Same goes to the bearish candlestick, but like basically vice versa. The beginning of the body is opening, the bottom of the body is the closing, and shadow also shows us the highest point of the price and the lowest point of the price. Now we know how candlestick structure looks like. We're moving on to the second topic, and this is candlestick patterns. First question you may ask yourself is, why do I even need to differentiate between patterns? And the answer is supposed to be obvious to you, because as a trader, you need to predict the movement of the price on the chart. And the candlestick pattern is one of the most effective instruments for that. First of all, we're going to talk about engulfing candlestick pattern. And this pattern gives us the ability to predict the price reversal and the movement of the price. And also, from the name of engulfing candlestick pattern, you may understand that this is absorption of one candlestick by another one. And in this case, we can see the bullish engulfing. Right here, the price of opening and closing of the second green candlestick is outside of the limit of the previous candlestick of red color. And this is the big indicator for us that the price is going to go up. If we're talking about bearish engulfing, it's a little bit vice versa in terms of colors, because we still see the absorption of one candlestick by another, and this is the signal for us that the price is going to go down. Now we are going to move on to the chart and look how we can trade using this pattern. But before we do that, I just wanted to remind you that I can see everything on this channel who is doing what. And I can tell you that right now, some of you who are watching this video are not subscribed to this channel. And I have a little challenge for you. If at the end of this video you understand that information that you heard and saw is actually useful for you, you must subscribe and leave a like. But now let's move on to our chart. Now we are going to look at engulfing candlestick pattern in action. Right here you can see that we had a really strong uptrend, there was a little correction, and the price again went up. And at this point, the price is going down again. And we understand that we have a couple of different scenarios. It's either the price is still gonna go down according to the trend, and it's gonna be a downtrend, or this is gonna be another pullback where after which the price is gonna go up again. Now let's look at what's gonna happen. And the price is going down according to the trend line, but at this point right here, you can see that there is engulfing candlestick pattern forming. And here you can see, obviously, that the candlestick is bigger than the red candlestick, and basically it is absorbing the red candlestick. And this is a really strong signal for us that the price is gonna go up. And if at this point we are gonna enter a deal for an uptrend, let's do this little thing and see what's gonna happen. And of course, the price is gonna go up, and it basically breaks through the trend line and it keeps growing. Second example is gonna be the bearish candlestick pattern. And right here you can clearly see that the price was moving according to the trend line, and at this point it actually broke through the trend line. As you know from my lesson on trend lines, right now we are either waiting for an upward trend and the price is gonna go up and break through the trend line, or it's again gonna go down, and this is gonna be our continuation pattern. So price is gonna go according to the trend line. And in this case, it's actually not enough confirmation for us. And the confirmation is going to be the next candlestick. As you can see, this is engulfing bearish candlestick. Let's put a little note right here. And thanks to this second candlestick, we have the opportunity to open our deal for a downtrend, because the confirmation is our engulfing, and we are waiting for the price to go down. And we see what's going to happen here, and the price actually is going down. So let's look at one more example. And right here you can see that the price was going down, right? And right now there was a little pullback. And right here, you can see that the bearish engulfing candlestick is forming because the red line is basically absorbing the green line. We're waiting for the candlestick to close, and we are opening a deal for a downtrend, right? And now we're gonna wait for the deal to close and see what's gonna happen. Okay, and as you can tell, the price continued to go down and the deal is closed in black. Let's move on to the next pattern. Now, next candle pattern. And this pattern you actually already know because we used it in this video right here, and this is Doji candlestick pattern. And let's talk about how it works. Basically, Doji candlestick is a little candlestick with a really small body and big shadows from both sides. It can be red color or green color. It doesn't really matter. What matters is what does it mean. This pattern shows us the uncertainty in market. Basically, the bulls tried to higher the price and it didn't work, and then the bears tried to lower the price and it didn't work again. And if this candlestick is actually on the peak of the trend and basically the price was going up and this candlestick was formed, this is a really big signal that there's going to be a trend reversal and the price is going to go down. And of course, vice versa, if the price was going down and at the end there was a Doji candlestick formed, this is a big signal that the price is going to go up. Let's look at the example of Doji candlestick. And right here you can see that there was a downfall of the price and the price is growing right now. Now we're waiting for the Doji candle and there it is. And the color of the candlestick, it doesn't really matter because the price could be open a bit higher, a bit lower. It doesn't matter if it's red or green. It means that there is supposed to be a reversal of the price. And if in our case the price was going up, the Doji candlestick shows us that the price is going to go down. And it's really important that I never open the deal right after the Doji candlestick is formed. I'm waiting for the second candlestick. And if in this case, for example, the next candlestick it doesn't have any shadow on top, that means that's a signal for me that I can enter a deal for a downtrend in this case. Let's put a little line right here, and we basically opened our deal, and let's see, of course the price is gonna go down and the deal is gonna be closed in black. One more example with a Doji candlestick, and right here you can see that the price was going down, it was a downtrend, and you see the Doji candlestick formed, but we're not opening the deal right away. We're waiting for the next candlestick with a different color with no shadow on the bottom, and we have it right here, green one with the shadow on top, and we use this place as the point where we enter the deal for an uptrend. Of course, we open it and you can see that there was a reversal of the price and the price is growing. Now let's talk about momentum candlestick pattern. This candlestick pattern is really easy to see on the chart because it's generally just a gigantic candlestick. And for us to call it momentum candlestick pattern, it basically is supposed to be 2-3 times bigger than the previous candlestick. Basically, it looks like this, just like a gigantic beast, right? And this candlestick pattern gives us the understanding that most certainly the price will continue at the same direction where it basically was formed. Let's look at the momentum candlestick in action now, and in this case you can see that the price came to the resistance point that was created earlier, and we're waiting for the price to bounce and grow, right? And we're waiting for our momentum candlestick, and there you go, you can see it, the gigantic beast on the chart. And this is the exact moment for us to enter a deal with no hesitation for an uptrend. And let's see what's gonna happen. Of course, the price jumped higher and it grows. Okay, now we are getting back to pocket option, and we are going to try to find the deal using our momentum candlestick pattern. So as usual, it's not going to be really fast, or maybe I'm lying because I have already found a place where we can enter our deal, because you can see that there is a downtrend beginning to form, and right here we have a really strong candlestick going down. And this is not just any momentum candlestick, this is a Marubozu momentum candlestick. We're going to talk about Marubozu a little bit later, what's going on with me, I don't know. But for now, while we are waiting for this transaction to close, I just wanted to remind you about our free course on binary options, in which in 9 lessons we have sorted out everything necessary for you to build your own strategy and start trading in plus. So if you are just starting a trading journey and you want to improve your results, then you can simply text me on my Telegram, link to which is going to be in the description box down below. And by the way, completely forgot to say that additionally to your free course in 9 lessons, you're going to get a help from a supervisor who is going to be there for you along the way. But for now, let's wait for this transaction to close and see what's going to happen. Okay, really great. The transaction is closed in black because we read the chart the right way, even though we have a little correction right here, but we still got our money, and we are moving on to the next pattern now. So the next one is Marubozu candlestick pattern. This is a really kind of candlesticks, and if you look at your chart and you have an uptrend, you can see the Marubozu candlestick, and it's going to look like this. This is a simple candlestick with no shadows on the bottom or on the top, meaning that when the candlestick was open, during the whole time it was open until it was closed, the price was moving only up, and it was closed at the moment of closing. And for the most part, it's a really hard signal that the trend is going to continue the same movement, and we can open the deal for a uptrend, and vice versa. With the downtrend, it's going to be the deal for the downtrend. Trading with Marubozu candlestick pattern is really simple. For example, right here you can see that there's like a simple downtrend, the price is going down, but there is a possible uptrend. We see next the Marubozu candlestick because we don't have any shadows on the top or on the bottom, and this is a signal for us to enter a deal for an uptrend. Of course, we're gonna speed it up and wait for the trend to go up, and as you can see, the price is still continues to grow. And of course, same goes to the bearish Marubozu candlestick, and you can see that we are waiting for the price to go down here because the bears are having more power on the market right now. We're opening our deal for the downtrend and the price is going down. And the last couple of candlestick pattern is going to be hammer and shooting star. Hammer or hammer, it depends on your accent. I say hammer, sorry. So hammer is a candlestick with a small body on the top and a really long shadow at the bottom. It's called like that because it basically looks like a hammer, whatever you call it. And this candlestick gives us the idea that the price opened right there, then it dropped, and then the sellers, they couldn't compete to the buyers, and buyers got the price back up and even higher. And of course, that's a good sign for us that the price is gonna go up and we will see the beginning of an uptrend. And shooting star is complete opposite to this story. This basically we see that the price opened right here and buyers, they shoot the price up there, but the sellers actually drop the price back down. And that's again a good signal that we are waiting for a downtrend and the price is gonna go down. Now look at hammer in action. So in this case, you can see that the price was going down before we have this candlestick, the last one. This is a hammer basically. As you can see, the sellers actually lowered the price to down, but the buyers actually got it back up and even higher. And this is a really strong signal that the trend is going to continue up and the price is going to get higher. And this is a good point for us to enter a deal. And as you can see, the price is actually going up. And of course, let's look at the example with a shooting star. So this is the example, and right here we can see the shooting star point, and it's basically like hammer upside down. And we can see that there was an uptrend before it, and right here there was a point of resistance. Basically, the sellers got the price really high, but the buyers put it back down. And this is a good point for us to enter a deal for a downtrend. And as you can see, of course, the price is going down and we of course getting the money. And finally, this is the last time for today that we are getting to pocket option. We are going to try to find hammer or a shooting star in real market and open the deal with this pattern. Okay guys, so right here is going to be our first deal, and we're opening a deal on a downtrend because we found a shooting star pattern. So let's see what's going to happen, but we are waiting for the price to go down right here. Okay, great, our deal is closed in black. And I just wanted to mind you about really interesting moment that we added GBP GPY right here, and it's like 34% of getting money. But I opened the deal because I don't want to make this video for like an hour again, and we're really lucky to find this deal. But in real life trading, I really recommend you to get rid of the currency pair lower than 70% because the risks are the same, but the money that you get are lower. So don't really use it in real trading. So guys, today we have analyzed the main patterns that I personally use in my trading. And of course, there are much more patterns than those that I showed you in this video. So if you want to see and learn more information about other ones, just leave a comment in the comment section down below, and I will definitely shoot a whole sequel on this topic. And I also want to remind you that to get my free course for trading on binary options, just simply need to text me on my Telegram, link to which is as usual in the description box under this video. And by the way, as you notice in this video, I have used trend lines several times, so I also recommend you to watch this video right now to combine the trend line strategy with the static pattern that we talked about today. But that's going to be it for us for today. Thank you so much for watching, and don't forget to subscribe to this channel and leave a like, and I will see you in the next one. Bye bye.